Good morning this Monday, the 8th of September. I'm Grady Wolf, Senior Market Analyst with Bell Direct. Wall Street closed lower on Friday as investor fears of a slowing US economy rose after key US non-farm payrolls data came in much weaker than expected. The Dow Jones lost 0.5% to end the week lower, the Nasdaq declined 0.03%, and the S&P 500 ended the day down 0.32%. For the month of August, non-farm payrolls increased by only 22,000 jobs, significantly lower than the 75,000 jobs economists were expecting to be added. US unemployment rate also rose to 4.3% for the month. That's up from 4.2%, signalling a weakening labour market. While a rate cut out of the Fed is almost certain now, investors are more concerned over the long-term impact of a slowing economy, and fears of a recession continue to rise. In Europe on Friday, markets closed lower as investors in the region also assessed this key weakening economic condition of the US following the weaker than expected jobs reading out on Friday in the region. The STOXX 600 fell 0.2%, Germany's DAX lost 0.73%, the French CAC declined 0.31%, and in the UK the FTSE 100 ended the day down 0.09%. Across the Asia region on Friday, markets closed mostly higher after President Trump formalised lower tariffs on Japanese auto tariffs, with baseline tariff for the region of 15% across all Japanese imports now. Japan's Nikkei rose 1.03% as a result. Hong Kong's Hang Seng gained 0.71%, and South Korea's Kospi Index ended the day up 0.13%. Locally on Friday, the ASX 200 posted a 0.51% rise as real estate and discretionary stocks rose 1.37% and 1.33% respectively. Gold stocks gained further ground on Friday amid the record price of the precious commodity as investors once again flocked to safe haven assets in the wake of further global uncertainty. Qantas shares rose 1.5% on Friday on news that Chief Executive Vanessa Hudson's bonus would be docked over the airline's recent cyber breach, while Orica shares added over 1% after the company signalled positive momentum is driving higher underlying earnings across its business for H2 ending September 30. On the commodities front this Monday morning, oil is trading 2.38% lower at $61.97 a barrel. Gold is up 1.3% at $3,592.5 an ounce, and iron ore is down 0.04% at $104.49 a tonne. The Australian dollar has strengthened against the greenback to buy 65.57 US cents, 97.1 Japanese yen, 48.53 British pence, and $1 New Zealand dollar and 11 cents. Ahead of the first trading session of this new trading week, the SPI futures are anticipating the ASX will open the day down 0.2% on the back of global market weakness on Friday. And now let's dive into some trading ideas for your consideration today. Bell Potter has increased the rating on Technology One from a sell to a hold and have maintained the 12-month price target on the company at $35.75 a share. Amid changes in forecasting for the company, with Bell Potter's analysts and the market anticipating a beat in November. At a stock-specific level, we do not see much risk of disappointment or negative catalyst, and as mentioned, we already expect the company to exceed its guidance when it reports in November. And Bell Potter has also reduced the rating on Curvebeam AI from a spec buy to a hold and have a 15 cents per share price target on the company following the release of the company's FY25 results, including revenues and gross profit of $12.1 million and $6.7 million respectively. The reason for the downgrade to a hold comes from lack of guidance, high-rise device sales continuing to be constrained by the Mako validation matter, and the hybrid of capitalised earnings. And that's all for this Monday morning. I hope you have a wonderful day, a great week, and happy investing.